Welcome to a very detailed example on using C39 and MOSS. The C39 is a signal while MOSS is a scalping tool to place multiple orders and make scalping more profitable. In this example I will show you how to use both. Important to know is that C39 is built into Aries while MOSS is an expert advisor written in MQL4 for the MetaTrader 4 platform. This is the gold chart all FX traders use to trade spot gold. Future traders will use the gold futures GC chart, but it's very similar to this one. You can use the C39 solely on any chart, but knowing Elliott Wave principle is of great advantage, as you will see. This is the moment in time when I made a bold call on Twitter to go all in on gold. It was in May 2019. You will certainly ask, why did I make the call at this particular moment? The reason was based on Elliott Waves. I will not go into explaining Elliott Waves, it's out of the scope of this video, but will tell you where the price is regarding the waves. Price is making the bottom of minor wave 2, of intermediate wave 3, of primary wave 3. The recent high you see on the chart is the minor wave 1 top. As you may know, after every impulse wave comes an ABC correction. Here we have the impulse wave 1 and correction into wave 2. This correction certainly doesn't look like a 3-wave ABC correction. Corrections can be of 5-wave structure, A, B, C, D, E, instead of a simple ABC. This A, B, C, D, E is forming a triangle type structure, or converging trend lines if you like. There is no way of knowing but the very end. Trend traders would have been caught in a bull trap beginning April, assuming a flat ABC correction, this one, with a double bottom formed by wave A and wave C lows. Price started rising but collapsed before making a new high above wave B high, broke the double bottom support, making a new low. Now, every Elliott Wave practitioner would know, including myself, that this is going to be an ABCDE rather than a simple ABC correction. We need to wait for this correction to play out and jump in when finished. These two trend lines should serve as guides for ABCDE. The new low is now the end of wave C, and price should make the new wave D high and another low on wave E. Again, a double bottom confirming the price is about to rise. This bearish candle could have been the wave D top, but price continued higher. One other important thing to notice is the clear resistance at the blue EMA, why an assumption of a wave D top could have been correct with this double top. Instead, price continued higher, breaking above the EMA river and even breaking the falling resistance trend line, but failed to make new high again and went below trend line and EMA river into previous double bottom support, making a triple bottom. So we have the wave D top and waiting for the wave E low. We can regard wave D top as a failed breakout, hence the next one will be the real breakout after low of wave E. Price bounces off triple bottom, marks the trend line, and the very next day breaks out. Yet again the blue EMA provides resistance, but last candle breaks the EMA river and closes above. We have the final wave E low, although truncated, not making a new low regarding wave C. The price is about to go much higher, reaching the minor wave 3 top. Notice the triple bottom and Elliott Wave oscillator values. Nice bullish divergence confirming the correction has ended. And you can see the Elliott Wave oscillator pointing out the tops and bottoms of A, B, C, D, E waves. On wave B and D tops, the Elliott Wave oscillator went positive, and wave A, C and E were negative, with bullish divergence on wave C and wave E lows. This was the Elliott Wave analysis, crucial for entering a longer-term long trade on gold. This was the reason I made the bold call on Twitter to load up longs on gold at 1290. From this point on, gold went above 2000 per ounce in a very strong rally. Now that we know where price is heading, let's look at the C39 signals. 9 bullish and bearish signals have been generated by C39. Understandably, a lot of them since price was making 7 highs and lows. Not much profit to take switching from shorts to longs and back. This statement is false. There's much to take if you scalp the price action with MOSS. Let me show you how much. First short triggered at 1328.97 with stop at 1333, exit at 1291, making roughly $38 worth move. The risk to reward ratio was 1 to 9.4. Extraordinary risk to reward. Risking 1 to gain 9.4. Depending on your account size and position size, this could have made you 3,800 with one full lot. Why not, since your risk was just $400? If you used MOSS on this trade, you could have used the reverse button and switching same short positions to long ones at 1291. Why would you do that in a correction? Well, after the wave A low comes the wave B high, and it would be a trade in line with the larger trend. If you are a scalper, it is a very reasonable trade. Where would you place the stops on this long trade? Below this doji low when price broke above it, high at 1280. Why? Every doji is indecision, an equilibrium between buyers and sellers. A break above the highs or below the lows means the decision has been made to get out of that equilibrium, and either buyers or sellers will prevail. In this case, the buyers. One more reason to use this level for stops is the blue EMA providing support. Where to look for the target on this long? Again, Elliott Wave principle comes very handy. The wave A can be either a 5-wave or 3-wave structure, but the wave B is always a 3-wave structure. In a correction, wave A is the impulse wave of the correction, while the wave B is a corrective wave. And we know that corrective waves have a 3-wave structure, ABC. The last wave C is again an impulse wave. Of every correction is always a 5-wave structure. Okay, by switching to long, we trade the wave B and it has 3-wave structure. But where should the wave B top be and our target? According to Elliott Wave principle, the wave B retraces wave A in the zone of 61.8 to 78.6%. If we measure it on chart, this is the zone we are looking for the wave B top. The first possible target is at 1321.6. Regarding our entry, switch from short to long at 1291 with stop at 1280 and target 1321, we have a risk to reward 1 to 2.9. Enough to take risk, but far from the awesome risk to reward we had on the short trade. After price reaches the wave A top, price goes down on this big bearish candle, which engulfs the previous bullish one and finds support at red EMA. The C39 gives the signal to buy on close of this bearish candle. This is important as we get the confirmation to go long if we haven't already, but since we did, it is a very nice opportunity to add on existing longs. If you use MOSS, you would have open positions with, let's say, a magic number 111. Now you add more with different magic number, let's say 112. These positions have been filled at 1296.4, with stops just below the preceding bearish candle at 1292. These positions have a much better risk to reward of 1 to 5.6. Since we have the wave B pullback and price on the way to wave C top, a good practice is to move the stops of the previous cluster positions to the last stops at 1292, eliminating risk on those and leaving only risk on second cluster positions of just $440. For the sake of this explanation, let's assume the first cluster contains 2 positions, each half a lot. In total, 1 lot for a potential gain of $3,000 with a risk of $1,100. The second cluster has as well 2 positions, half a lot, with potential gain of $2,460 and risk of only $440. Substantially lower risk on second cluster C39 signal. However, at this point, with first stops rolled to second stops, the risk on first cluster is eliminated and we have only $440 of risk for a total of $5,460 potential gain. Now the risk to reward is an astonishing 1 to 12.4. As you can see, the price has reached the zone and the target on both position clusters, making the potential profit into real profit of $5,460. Using MOSS, you closed both clusters, 4 positions with just 2 clicks. One closing the 112 and the second closing the 111 magic number clusters. You could have closed the 111s and then the 112s, makes no difference. This was an example scalping the correction and how to manage the trade and risk. Now let's look at the much longer trend trade from the wave 2 into the wave 3, or let's say from 1290 into 2000 worth of whooping $710 of price action. What reasons did I have to make bold call on longing gold at 1290? First one. On broader picture, we had a pullback from wave 1 into wave 2. The second. The correction was of an ABCDE type rather than ABC. The third reason, bullish divergence between wave C and wave E low in this correction. The fourth reason, a triple bottom. The fifth reason, and maybe the most important one, not one but 2 C39 signals for long. And we can add a sixth, price made a bullish break of EMA river and closed above, which means that the price has entered bullish territory. I believe this is more than enough to get involved with a very high level of certainty. Long-term position opened at 1290 with stop below the previous bullish candle at 1275. If you remember in my previous videos, the important level to watch for intermediate wave 3 is the 161.8% of wave 1, which comes at 1562 level. By opening this position, we risk $15 for a potential profit of $272. That gives a risk to reward ratio of 1 to 18. No matter what position size you take, a standard in my opinion is 1 lot. That means we risk $1,500 for a potential of $27,200 gain. Using MOSS, we open 2 half-lot positions at 1290 and follow the price action scalping on the way up with multiple positions. We already have minute degree wave 1 and wave 2. Price reaches previous wave 1 high, making double top and pulls back with this bearish engulfing candle. Sign to close a short-term position at 1327, banking $1,850 of profits with half a lot. That's just one position. The remaining position is still at risk, so rolling stop to break even is a very good practice, eliminating any risk. We look now at the correction and next break higher. The bullish engulfing, and we open a new cluster of 2 half-lot positions with MOSS but with different magic number at 1333.5 with stop at 1320, risking $1,350. But where is the target? Elliott waves will show us. We have 4 waves so far on this impulse move, and the first possible top of the 5th wave should be at 1366.72. At this point, the first possible wave 5 level has been reached and breached with a new high. Time to eliminate risk on second cluster positions by moving the 1320 stops to 1333 and locking some profits by rolling first cluster position stops to 1320. We banked $1,850 and locked in another $1,500. Whatever happens now, all hell can break loose. We will end up with $3,350 of profit, or let's say $3,350. This is what good risk management is about. Price continues higher in a strong rally, reaching almost 686% extension of minute wave 1 for the wave 5 top. This is a very, very extended wave. A following bearish engulfing candle is assigned to close one position from the second cluster at 1408, banking $3,725. This minute wave 5 top is the minor wave 1 top, and we expect a correction into minor wave 2. Price makes ABC correction with massive bullish engulfing afterwards, then a double top with a doji and drops down with a higher low. A new cluster with MOSS, two half-lot positions opened at 1401 with stops at 1385 on this big bullish candle breaking the high of previous candle high. This is the third cluster, and we rolled the stops from the second cluster to wave 2 low at 1381. At the moment we have one position from first cluster with 1500 in locked profits, one position from the second cluster with $2,375 of locked profits, and third cluster two positions with a risk of 1600. Why did I open the third cluster? Well, there are three reasons. The wave 2 pullback has ended after an ABC correction. That's the first one. The second one, the move higher on massive bullish candle doji top marked a smaller degree wave 1 and another pullback marked a low of wave 2. And the third most important reason is confirming a new move higher with the C39 signal. These are C39 signals. First, the bearish to exit the positions opened before even 1290, and the second to switch to long. Since I closed before the bearish signal, I disregard it but went long on a bullish signal. After all, this is a bullish trend and bullish signals should be respected. Price breaks higher but immediately pulls back on tweezer pattern, which is not regarded as a bullish sign, and we have a bearish divergence on Elliott Wave oscillator. Shortly after, a new bearish C39 signal, and I stay put waiting to see what happens next. New bullish signal, and I add the fourth cluster with two half-lot positions at 1418 with stops at 1411. Added risk is $700. Well, this bearish candle stops out the fourth cluster positions with a loss of $700. That was the risk. As I get stopped out, a new bullish signal has been generated by C39 on the same candle at the close. That took me out, and I open again a cluster of two half-lot positions at 1413 with stops below the wick at 1400. Risk of $1300. Massive bullish engulfing, and price should continue higher after C39 signaled twice, just like it did before the entry at 1290. I'm looking for the minute wave 3 top since price made a new high. Time to roll stops and protect profits. Second and third cluster positions rolled to fourth cluster stops at 1400. First cluster half-lot position protected with locked profits. Second cluster positions also protected and locked profits. Third cluster at break even, and only fourth cluster at risk with $1300. Again, as I said many times before and in my previous videos, the 161.8% extension of wave 1 is important for wave 3. Price went slightly above it and found support around 1495. Price rises from double bottom in a formation called 2 inside up. Bullish candle with two bearish candles inside, followed by a big bullish candle which engulfs them all. Fifth cluster added at 1509 with stop at wave C low 1492. Target for the final minute wave 5 is 1563. If you remember at the beginning of the video, I told you that the higher degree Elliott Wave sequence is targeting 1562. So this is very close. This is very, very important because, as you know, Elliott Wave structures can be decomposed to smaller sequences, and this is in fact a smaller sequence inside a much larger sequence, and they both point out to the almost same level. This is very important. So this is the level we are looking for. Price couldn't reach the 1563. It came close though at 1557. I closed all clusters at 1519 but the first one. The C39 gave a bearish signal. When you see a bearish signal very, very close to the wave 5 top you projected with Elliott waves, so this is the opposite direction. This is a sure sign to close your positions. And I did the same. I believe that I explained in detail how to use MOSS and C39 on this example. This is the minor wave 3, and the same practice should be performed from wave 4 into wave 5. I tried to keep this video as short as possible and explain everything in detail. It makes no sense to explain you the trades from wave 4 into wave 5, since it is pretty much the same. Important is to understand how to use the C39 and MOSS using multiple positions, adding on pullbacks to boost profits. Let's see how much has been made with MOSS so far. So we have a first cluster, one position closed for $1,850. Second cluster, one position closed for $3,725. The second cluster, the remaining position closed for $9,275. The third cluster, both positions closed for $11,800. Fourth cluster, both positions closed for $10,600. And the fifth cluster, both closed for $1,000. Meanwhile, we had one cluster closed with a loss of $700. That was a stop out. And there is one remaining position from the first cluster. It is still open with $11,450 of profit. If we assume the first cluster open position has been closed at $15.19 as well, we have $11,450 more on top. In total, at this point in time, it is $49,000. Significantly more than double than if you would have traded this with one position from start to end. And I mentioned this on the beginning of the video, the risk and the potential reward. And if you remember, it was around 27,000. We generated 49,000. I covered here the intermediate wave 3 trade. Imagine how much you could have made on the rest. Just by using C39 with MOSS, you will make astonishing results. Now try to imagine what is possible with Aries, since Aries has Elliott Wave principle built in as well. You saw me counting the waves, predicting targets and adding on corrections. Without Elliott waves, adding on pullbacks is very hard. Aries is the real deal if you want extraordinary results. Whoever donates to Aries fundraiser at least €50 gets C39 and MOSS from me for free. Help us to help you. Fund Aries. Cheers.